A very good day to all of you. We are from group number 4 and today we are going to present the analysis we conducted on the financial statements of Nestle Lanka PLC. Before moving further on, let me give you a summary of what we are going to cover through our presentation today. First and foremost, we will have a look at Nestle Lanka PLC. Then we will move into the industry analysis, followed by the investment analysis, profitability analysis, and finally cash flow and prospective analysis. So let's start with the company overview. Nestle Lanka PLC is the Sri Lankan arm of Nestle, a multinational company based in Switzerland. Nestle Lanka is mainly into manufacturing of liquid beverages, dairy products, coffee-based products, confectionaries, and breakfast cereals. Some of the most popular brands of the company in the Sri Lankan context are Maggi, Milo, Nescafe, Nestle Malt, Kit Kat, Milkmaid, Nespresso, and Nangro. Moving on to the industry overview, Nestle Lanka falls under the foods and beverage industry of the manufacturing sector in Sri Lanka according to the GICS industry classification of the Colombo Stock Exchange. In the food and beverage industry, the main competitor of Nestle Lanka are public listed companies such as Kiehl's Food Products PLC, Renka Foods PLC, Lanka Milk Foods PLC, Ceylon Cold Stores PLC, and Convenience Foods Lanka PLC. Moreover, companies such as Unilever, Sri Lanka, and Ceylon Biscuit Limited also have a competition with the company, even though they are not publicly listed. Now, to continue with the rest, let me invite Tejana.
Thank you, Ahinsa. So let's take a look at the Porter's 5 forces analysis for the food and beverage industry. The first out of the 5 forces we have is the threat of new entrants. With regard to the food and beverage industry, a company wishing to enter will require a large amount of invested capital in terms of funds, manufacturing plants, machinery and equipment. On the other hand, access to efficient distribution channels is also mandatory for product distribution all over the country. This indicates that barriers to enter into the industry are relatively high, which makes the threat of new entrants low, which makes the industry attractive. The second force is the threat of substitutes. When it comes to the food and beverage industry, there are large number of local companies providing the same products as Nestle Lanka at relatively lower prices. Further, the switching costs to buyers are also at a minimum, as it is just only a matter of selecting another substitute from a supermarket. Therefore, this makes that the threat of substitutes high, which makes the industry relatively unattractive. The third force is the bargaining power of buyers. When it comes to the food and beverage industry, almost all the consumers in the country represent buyers. The product switching cost to buyers is also low, as described earlier, with the availability of many substitutes. The overall impact of these factors increases the bargaining power of buyers, which makes the industry relatively unattractive. The fourth force is the bargaining power of suppliers. As Sri Lanka is producing common food and beverage products, the inputs needed are very common and can be obtained from a number of suppliers who are abundantly available in the market. Since the inputs are common to all firms in the industry, the supply switching costs to the firm are also low. This makes the bargaining power of suppliers low, making the industry relatively attractive. The final force is the competitive rivalry. In the food and beverage industry, the large players such as Nestle Lanka can take advantage of economies of scale. As mentioned in the previous slide, there are large number of competitors in the market as well. Further, customer loyalty to firms can be relatively low because of the commonality of products offered. The combined impact of these factors increases the competitive rivalry, which makes the industry relatively unattractive. Accordingly, considering the effect of all the 5 forces, we can say that the food and beverage industry is somewhat unattractive. Now, to continue the rest, let me invite Hiroshi.
Thank you, Tejana. Let's now look at the SWOT analysis for Nestle Lanka PLC. Firstly, speaking of the company's strength, one of the major ones are that it has an international level product portfolio with a supreme quality, which makes the company stand out from the rest of its competitors. As outlined at the beginning, it also has a large asset base and the large scale of operations throughout Sri Lanka, which adds to its strength. Also, the company has advantages from economies of scale with a well-renowned company and product brands with the ability of obtaining financial and operational support uh, from its mother company. Now, when it comes the company's weaknesses, the high usage of plastic in its product wrapping can be considered as a major one. This results in the ability of company to meet its sustainable goals. Now, moving on to the company's opportunities, one of the main ones are its potential to diversify into other areas of fast-moving consumers goods such as home care and personal care products. Furthermore, it also has a potential to cater to more high-end consumers by bringing in more luxury products from its international product portfolio. Finally, as for the threat, the growing perception of Sri Lanka to support local businesses can have a huge negative impact on Nestle Lanka. On the other hand, the high inflationary situation in the country can also pose a threat where the cost of production might increase. Now I invite Avishka to continue the rest.
Thank you, Hiroshi. Let's now move into the first section of our analysis, which is investment analysis. Under this section, we analyze the non-current and current assets of Nestle Lanka PLC. Accordingly, the first asset we have is cash and cash equivalents. As outlined by the Central Bank of Sri Lanka, the food and beverage industry faced a significant contraction during the year 2022. This implies that Nestle Lanka is operating in a highly volatile environment, which creates a requirement for the company to increase its liquid assets, especially cash and cash equivalents. As per the financial statements of the company, cash and cash equivalents have increased by more than 153% during 2022, mainly resulting from short-term investments. However, cash margins held in bank accounts as compensating balances for borrowing arrangements represents 12.35% of cash and cash equivalents. This means that the portion of cash is not readily available for the company. With regard to trade receivables, they have increased by more than 65% during 2022. However, as you can see from the graph in the slide, trade receivables as a percentage from sales are only 4.33% for Nestle Lanka PLC, where when compared with competitors is the lowest. This implies that the majority of sales of the company are on cash basis and the default risk of receivables would not have been a significant impact. Moreover, the trade receivable agent disclosures reveal that more than 98% of trade receivables are within the company's credit limit period, implying that the credit risk is also at a minimum. Moving on to advances and prepayments, they have increased by more than 650% during the year, which is highly abnormal. Our analysis of this revealed that vendors' requirement to make advance payments for orders because of restrictions on opening letters of credit and reinitiation of company projects, which were earlier on hold due to the pandemic, are the main reasons behind this significant increase. When analyzing inventories, our main focus was the inventory valuation method. Accordingly, the company uses FIFO method for valuing raw materials and the moving weighted average cost for valuing all the other type of inventories. The use of FIFO method can be regarded as appropriate given the current inflationary situation of the country. However, this might have a counter effect on the company's cash flows. Since FIFO increases the income level, it results in increases profit, which ultimately leads to higher income tax levels, negatively affecting the cash flows. From the analysis of PPE, it was identified that the company has recorded assets impairments which were not present during prior years. However, the impairment amounted only for 0.11% of the total carrying value of the PPE, which is not significant. The depreciation allocation base of the company has also been constant throughout the years, where it has used the straight line method. However, the useful lives of tools, furniture and office equipment and information systems have been revised, which could have effects on company earnings. When analyzing the accumulated depreciation to total physical assets ratio calculated for the company was 53.62%. This reflects that the existing physical assets of the company are only worth around 46% of their original value. Now to continue with the rest, let me invite Ranj.
Thank you, Avishkar. Now, the second section in our analysis is the analysis of profitability. When analyzing profitability, our main focus was on return on invested capital, or in other words, return on capital employed. This was because the measure of return on invested capital incorporates elements from both the income statement and the balance sheet, whereas most other measures of profitability focused on just one of the two statements. Accordingly, to analyze return on invested capital of Nestle Lanka, we divided it into its separate components, which are return on net operating assets and return on equity. When it comes to return on net operating assets, the reason for selecting it over return on overall assets was that operating activities of a business directly contribute in bringing the products and services to customers. Therefore, analyzing the return generated through such operating assets seems much more appropriate. As you can see on the first table on the slide, the overall return on net operating assets for the company has gradually increased over the years. To determine reasons for this, we divided it further into its separate components, namely net operating profit after tax margin and the net operating asset turnover. So as you can see from the second table on the slide, we have analyzed the individual components affecting the NOPAT margin as well. Accordingly, it is clear that the gross profit margin and general and administrative expenses have remained stable over the years, while selling expenses have decreased considerably. Therefore, it is highly likely possible that the management of Nestle Lanka has purposefully reduced its marketing and advertising expenditure in an attempt to increase its return on net operating assets. If it is so, this could have a counter effect on the company's product demand as well. Moving on to the second component of return on net operating assets, which is the net operating asset turnover, we have analyzed the individual components affecting the turnover, just as you can see from the table on this slide. As per the table, the inventory turnover has decreased over the years despite other asset turnovers being increased. Further, the long-term operating asset turnover and the net operating working capital turnover has also increased. By analyzing these changes, we can infer that the company's products might be becoming uncompetitive in the market, high inventory replenishment costs given the inflationary situation, possible increments in asset maintenance and insurance costs, and possible opportunity costs in terms of loss of short-term returns that could have been obtained from the capital invested in long-term operating assets. Now let's take a look at the second component of return on invested capital, which is return on equity. Analyzing return on equity in profitability analysis is crucial as it covers both the operating and non-operating aspects of a business. Accordingly, the return on equity for Nestle Lanka has been within the range of 40 to 75% of the years, as you can see from the first table given on the slide. In order to make the return on equity calculations more meaningful, we calculated the percentage of return on equity derived from return on net operating assets of the company, which is presented in the second table in this slide. Accordingly, it can be seen that the ratio has increased over the years, implying that operating activities have mainly contributed to generate a return on equity. In other words, operating activities have become dominant over the years, which might be due to factors such as effective leadership and management, use of new technologies, efficient distribution networks, and availability of skilled labor. Now, to continue with the rest, let me invite Kavinder.
Thank you, Ranush. Analyzing cash flows of a business is vital as it provides many valuable insights into a business, such as its ability to meet obligations, raise capital, increase capacity, and pay dividends. Accordingly, we analyze the cash flows of Nestle Lanka through analyzing its cash flows from operations, cash flows from investing and financing activities, free cash flow, and cash flow ratios. As you can see from the graph on this slide, when we take the operating cash flows and net income of Nestle Lanka compared against its competitors, we can see that both the operating cash flows and net income is positive for the company when most of the competitors have a negative operating cash flows despite bearing profits. On the other hand, the operating cash flows to net income ratio for the company is also high, indicating that its earnings are of higher quality and there are no inconsistencies with revenue or expenses recognition. Further, the greater level of operating cash flows for the company reflects that it's financially flexible and has enough cash for investments and financing purposes. Moving on to the cash flows from investing and financing activities, the major cash sources for Nestle Lanka are its operating activities, long-term borrowings and interest income, whereas the major cash users for paying dividends, acquiring PPE, paying loans, and paying interest. During the 5 years we considered for our analysis, cash and cash equivalents of the company has increased by 19 billion rupees and on average. When taking as a percentage from total cash sources, operating cash flows accounts for 76%. Moreover, operating cash flows of the company has been sufficient to meet all the other cash requirements over the years as well. The free cash flow to the firm for Nestle Lanka for the year 2022 amounts to 10 billion rupees. This reflects that the company has adequate funds to be used for its growth purposes and to facilitate financial flexibility. Moving on to the cash flow ratios, the cash flow adequacy ratio for the company is 1.057. This means that its operating cash flows have been sufficient to meet its capital expenditure, inventory replenishments, and dividend payments while maintaining its current growth levels. The cash flow reinvestment ratio for the company is 27.37%. This reflects that nearly 30% of Nestle Lanka's operating cash flows are reinvested back in the business. Since this ratio is greater than the satisfactory level of 7 to 11%, we can infer that the company is reinvesting with the expectation of having an accelerated growth in the future. The final section of our analysis is the prospective analysis, where we have projected the statements of profit or loss and the statement of financial position for Nestle Lanka plc for 5 years from year 2023 to year 2027, as you can see on this slide. So that marks to the end of our presentation. Thank you so much for listening and have a pleasant day.